Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, November 19th, 2020. I am Frank Ochoa, aka PivotBoss. Good morning, everyone. Here's a look at the ES in the daily time frame. We've gotten a pullback here from recent highs. We got late day selling pressure yesterday through those 3580s. Failure to hold 3580s, as I mentioned yesterday in the pre-market video, would open up a move back toward 3511s. Right now we've seen lower highs here day over day, lower lows again today as well, and with a shot to continue downward toward those 3511s. There's the previous week's low is down there as well. Previous week's low comes in just shy of that 3507-ish, somewhere in that zone. And so we could be looking at a move into the previous week's low as well. So right now we have lower highs, lower lows developing. Now the ES is attempting to develop a failed new low right now where it's rejecting inside a bullish Pima trigger zone. It's rejecting previous session's lows and is currently above those lows. But if there's any failure to hold 35.56 half, that's the previous session's low, at any point today, that could lead to a failure of that move. In order for this to really get going to the upside, we need to see bulls reclaim that 35.80. Otherwise, a push even as high as 35.80 could become a selling opportunity for a move downward. Price is falling back below that 35.87 key level, back below the midpoint of the rejection day, and is now below 2-day lows as well. So again, any push into those zones from below could become resistance. Right now, any bounce off of that area would be, again, a short-term selling opportunity right here. Otherwise, bulls really need to reclaim those 35.80s. Okay, let's take a look now at the NQ. Right now, the NQ is showing a similar pullback to the ES. This one here has bounced off the FOMC key level from November 5th, which is 12.059.75s. That level went offered here. A retest also defended and pulled back. We have seen higher lows coming into play. We've seen this thing kind of compress this way, but we have seen an inability for price to really find acceptance above this 12,000 level right here. That's just the level right here where we have seen price get above but then fall quickly back below. It gets above it, back below it, gets above it, back below it. Here it was above it, we're back below it again. So that continues to be the key level here to watch. Remember, we are at the upper end of a very clear trading range here, so any rotation could offer a move not only back to the center of the range, but perhaps even down toward the bottom of the range up ahead. So unless price can find acceptance through 12,200 here at some point, or the previous month's high, we're really going to start to see still a bit of weakness at these highs. Okay, let's take a look here at crude oil. Now, crude oil is currently holding above that 41.26 level. That is basically today's low. It is today's low right on the dot right there. That 41.26 is the FOMC key level from July 29th. That level right now holding at the moment as support for the day. Yesterday we had a bit of rejection here. That midpoint is basically today's high. 41.99 is yesterday's midpoint. Again, 42 is very, very important here. Can price push through 42s and open up more upside to 44s? That's about as high as this market has gone here lately. It's really going to need to push through 44s in order to really open it up to the upside and create way for a move to the CVPOC up here, which is 52.84s. So right now we are bumping up against it. We have, here's 44s here, and there's the range we've been following. Again, trying to find some acceptance through this upper edge. Otherwise, we could sit up here and still just kind of melt back down into the middle of this range. 40 bucks has been a very sticky level for this chart for a while. But right now, continuing to see strength overall, and 41.26 is short-term support right here. As long as price remains above that zone, we may continue to test higher. Failure to hold that level could dip this thing back toward 40 in the very, very near term. Lastly, taking a look here at gold futures, you'll see right here that gold just hasn't been able to go. It's attempted to push higher. We've had that very strong low when price sold off. We had the extreme reversal signal, a failed new low, very narrow range. It started to break higher, a shakeout day, a digestive absorption day, and all of this still didn't get this thing off the launching pad here. Instead, price closed below that midpoint the next day, lower highs, lower lows, next day, lower highs, lower lows, and here we are again testing levels below the previous month's low, testing levels below 1860, which has been a very important level. This market just hasn't been able to get going off the mat, and so when it can't get going, it usually has to run the downside stop. So right here, unless something really happens here to jumpstart this thing through 1900, we may need to test a bit lower. 1800 is the next key level below here. It's also where the 200-day would come to intersect into price. That may offer a bounce opportunity back up. Again, we have this great D-shaped profile that's developing here. The lower edge is still below, and again, with lower lows here these last couple times, we never got it this time. Perhaps we need to drop into a lower low to get this thing going. So right now, bulls still trying to hold this zone, but again, just because they're buying here doesn't mean they're getting paid, and at some point the downside sell stops could get triggered. On an intraday time frame today, we do have a rounded bottom developing above 1865. Could open up some short-term strength back to weekly VWAP at 1878. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.